Dan Willis here, and we're talking about a charge-off on your credit report. And there's three things we're covering in this video. First of all, what does a charge-off mean? How long does a charge-off stay on your credit report? And finally, should you pay a charge-off debt? Now, getting slapped with a charge-off on your credit report is devastating to your credit score. Not only will your credit score drop significantly, but you can also be charged higher interest rates by your current lenders, along with very good odds of being rejected for future lines of credit. It's no laughing matter. Poor tax is real, and trying to provide for your family in our brave new world with less than perfect credit can be a true challenge, especially in light of the emerging trend of potential employers checking job candidates' credit reports before offering them a position. But look, there is hope. Many of America's most successful entrepreneurs and business folks have experienced huge financial catastrophes. What does a charge-off mean? A charge-off means your lender has written the debt off, as in they don't expect to ever recover any funds for the account. As such, they can write it off for tax purposes. Typically, this will occur after 180 days of delinquency or non-payment. At this point, the lender will charge off the account, and they'll either send the charge-off debt to an in-house collection agency or a third-party debt collector. Frequently, charge-offs will take place with credit card accounts. However, they can happen with many types of debt, including a personal loan, for example. While the lender can write off this charge-off debt for their tax purposes, that won't eliminate your legal liability, unfortunately. Once the charge-off debt is placed with a collection agency, you'll get the never-ending phone calls, letters demanding payment, along with a collection reported on your credit report. Moreover, depending on the size of the debt and your specific circumstances, you may be sued. Yes, there are debt collectors nationwide that actively and aggressively use our civil court system to sue consumers. This can result in a judgment being awarded against you, and depending upon your state of residence, this can lead to wage garnishment, liens placed against you and or your property, and potentially even asset seizure. For the exact specifics, check out your local legislation, as every state has unique laws. And for the full story, visit an article at our website, link in the description below. We also have a free report available there for you, the 7 proven ways to boost your credit score. Now let's talk about how long does a charge-off stay on your credit report. A charge-off can stay on your credit report for a maximum of 7 years. Generally, it takes about 180 days of delinquency before the account is charged off. As such, it'll remain on your credit report for an additional 6.5 years. This is according to the Fair Credit Reporting Act, FCRA, federal legislation passed by Congress originally way back in 1970. The clock starts on your charge-off from your first date of delinquency or first missed payment with the original lender. Did you catch that subtle linguistic trick? The Fair Credit Reporting Act says the maximum amount of time is 7 years. In other words, there is no minimum amount of time any item must remain on your credit report. That's a fact. Many folks are surprised to learn our lenders and creditors voluntarily report our account information to the credit bureaus. There is no law requiring them to do so. Further, the Fair Credit Reporting Act is federal legislation that was passed to protect you, not passed for the credit bureaus nor the debt collectors. It's on the books with the purpose to protect you, the consumer. And look, if O.J. Simpson can get early release for a 33-year prison sentence after serving just 9 years, chances are good you too can get an early release from bad credit prison and escape the high cost of a low credit score before the maximum 7-year sentence slowly ticks by. The good news is every year millions of negative items are removed from consumers' credit reports, and long before the maximum 7-year sentence. This includes charge-off accounts. While some may find it hard to believe, charge-offs don't just happen to folks that refuse to pay their bills. One great example is with a divorce. If your ex-spouse is court-ordered to pay off a joint credit card debt and they neglect to do so, you too could potentially get stuck with a charge-off on your credit report, even if you weren't receiving the monthly bill. That's not fair, nor is the charge-off an accurate mark, and your credit score and pocketbook pay the price. There's many more examples, but that's just one to illustrate. And if you'd like some help, you can get a free credit report consultation by calling toll-free 1-844-517-7627. Now, should you pay a charge-off debt? The best answer we can provide is it depends. We'll elaborate, but if you believe just paying a charge-off will magically help your credit score, that is wishful thinking, unfortunately. If you pay the charge-off debt, the only thing that'll change is the status of the charge-off on your credit report. It'll be changed to a paid charge-off. This is still a negative item to have on your credit reports. And listen, if your goal is to raise your credit score, we need to remove the charge-off entirely from your credit reports, as if it never happened. And for many folks, not only will they have a charge-off on their credit report, but they'll also have a collection debt. You see, once the account is charged off, frequently this is the end of the relationship for the original lender or creditor. Many credit card companies will have an in-house or partnered collection agency they'll send these charge-off accounts to. However, once the in-house collection agency takes possession of the charge-off account, they have and use their ability to report a collection debt on your credit report. And just paying a collection won't improve your credit score. Again, all it does is change the status of the item on your credit report. Instead of having an unpaid collection, you'll be stuck with a paid collection on your credit report. And this is not a positive item that'll rebuild your credit score. So what do you do, and how do you get a better credit score, and how do you remove the negative credit report items? We need to start by dealing with the collection debt, and there are 4 steps to dealing with debt collectors. This is the due diligence. Our first step is to request debt validation on the collection account. This is your consumer right granted by the Fair Debt Collection Practices Act, FDCPA. This federal legislation was passed to regulate the debt collection industry, as in it's the rules for the industry. The big coup is it enables you to request debt validation on your alleged account, which means you ask the debt collector to prove it, or if you prefer, you ask for your original receipt. After all, you didn't do any business with the debt collector. They just showed up one day demanding money. It's best to make your debt validation request in writing and send it using certified mail. The debt collector is required to respond by providing you with the paperwork, evidence, and documentation that does prove this is your account. This paperwork should clearly show you all the relevant account details, such as who the original lender or creditor was, the dates of account activity, total balance, etc. If for any reason, even the debt collector just not having their paperwork in order, they fail to validate your account, you're no longer legally responsible for payment. Further, they're supposed to contact all 3 credit bureaus to have them get this collection mark removed from your credit report. And if you'd like some help, you can get a free credit report consultation by calling toll-free 1-844-517-7627. If they do validate your account, our second step is to review this paperwork in detail. We're looking for your last date of account activity. Contrary to popular belief, you're not legally responsible for charge-off debt forever. Generally, you're only legally responsible for about 7 years. This is according to the Statute of Limitations, a state law. And this law does vary from state to state. So for full details, check out your local legislation. Once this legal time window runs out and expires, the debt is supposed to be forgiven. This applies to credit card charge-offs, medical bills, collection debt, utilities, personal loans, telecommunications, retail accounts, and many more. One of the only exemptions to the statute of limitations is federal student loans in default. Warning. Yes, a warning and a big one. Debt collectors are notorious for re-aging consumer accounts, as this enables them to continue to attempt to collect payment for debts that are no longer legally enforceable. This is very true with charge-off accounts. Many collection agencies, especially late-stage or junk debt buyers, these are debt collectors that may have bought the rights to your debt from an earlier collection agency, will often view that account as brand new, and they falsely believe they have 7 years from the date they came into possession of the account to mess up your credit report and your credit score. Rather than the 7-year time window, the Fair Credit Reporting Act says from the original delinquency date with your original lender. Now, if your account is validated and within the statute of limitations legal time window, our third step is to negotiate a settlement agreement directly with the debt collector. And there's 2 parts to your settlement agreement, and it's wise to get this in writing. First, we need to negotiate to settle the debt for just a fraction of the balance. You see, it's likely your account has been charged sky-high interest fees in addition to collection fees, and these can be substantial fees. Often, you'll be able to negotiate and pay debt collectors as little as 20% up to around 40% of the total balance. For instance, with a $2,000 debt, you may be able to negotiate to settle for just 25% or $500. This is standard operating practice in the debt collection industry, and every debt collector should be thrilled to accept a settlement for less payment. But wait, before you pay, we have to get the second part of your agreement in place. We must get the debt collector to agree that in exchange for your payment, they'll stop reporting your account information to all 3 credit bureaus. If we overlook this part of your agreement, once you make payment, the only thing that'll change is the status of the collection on your credit report. It'll go from an unpaid collection to a paid collection, and this is still a negative credit report item that won't make your credit score go up. To get the collection removed from your credit report, we'll need to file a credit report dispute. Once the credit bureaus investigate the collection account, they'll contact the debt collector for verification of the debt. As per your settlement agreement, the account won't be verified, and as a result, the credit bureaus must remove the collection from your credit report. This is how to get rid of bad credit legally and by exercising your rights as a consumer. We're going to share all the nitty-gritty details of the credit report dispute process coming up next, so of course subscribe and join our congregation, and if you'd like some help, you can get a free credit report consultation by calling toll-free 1-844-517-7627. Again, that's for a free credit report consultation, and the toll-free phone number is 1-844-517-7627. This is Dan Willis. We're going to include a link in the description below over to an article at our website for the full story. We also have a free report available there, the 7 proven ways to boost your credit score. And of course, subscribe and join our congregation, because coming up next, we're going to be talking about how to remove this charge-off from your credit report and the nitty-gritty details of the credit report dispute process. So of course, subscribe. Have a wonderful day, and looking forward to talking to you again here soon.